Reddit's Wall Street Bets made headlines across the nation as they have successfully executed their plans of causing a short squeeze on GameStop stock.
The work is done. I won.
This event made some everyday Redditors extra thousands of dollars with the insane amounts of growth made in one day. With this historic stock market event, you definitely do not want to be out of the loop. In fact, this short squeeze is now one of the 2 short squeeze examples on Wikipedia. So, we will be going over how this short squeeze happened, what gains were made, and whether or not you should still jump in on this price action. Let's get started. Hello everyone, this is Mark with MC Stocks. Remember to subscribe and hit the like button for more videos like this one. And as always, remember to do your own due diligence when investing and seek a financial advisor for professional advice. So you may have heard it in the news or online. GameStop, the American video game, consumer electronics, and merchandise retailer, saw some immense gains this past week, soaring as high as 70% in the intraday charts before settling later in the day for around 45% in the green. But how could such impressive gains be made in a single day for a video game retail stock? Let's first start with how GameStop got into this position over the past few months. GameStop was known to be one of the largest video game retail stores in the United States, having over 5,000 stores open domestically and abroad. Even with that many stores running, the company as a whole was not performing so well. Unfortunately, the vast majority of the stores were made up of empty space and included products building up dust that no one was purchasing. The pandemic was a great time for video game publishers as they reported huge increases in sales due to the pandemic, encouraging people to spend more on at-home entertainment. However, GameStop did not see that benefit. Overall, the business model for GameStop was collapsing. The idea of purchasing video games in stores started to dwindle, as purchasing digital games online continued to uptick and become more mainstream. Sales at stores declined as consumers increasingly bought and downloaded games directly on their gaming devices, cutting into GameStop's business of buying and selling used games. In addition, gaming platforms like PlayStation, Xbox, and Nintendo are starting to not have their games purchasable in discs anymore, hurting GameStop's business as they only sold tangible, physical video games. Because of the amount of hits they were taking, GameStop's stock started to decrease over time, with the stock dropping 75% between 2015 and 2020 to a low of just $2.75. Wall Street analysts like Michael Patcher described the performance of GameStop stock over the years like a melting ice cube that will someday go away. This leads us to the events of recent weeks. After 400 to 500 stores closed in the late weeks of December, GameStop released their financial results from the holiday season, and it was by far not a pretty sight. The sales for the quarter were down 25%. To put this into comparison, Toys R Us declared bankruptcy in 2017, and in the last quarter of 2016, they reported their financial results, and their sales were down only 2.2%. With this comparison, saying that GameStop is in a tough spot would be an understatement. But even with such dooming news, GameStop chief executives and members of the board still remained optimistic. On January 11th, GameStop announced that they had struck a deal to onboard 3 new directors. But why is this significant? The new board members, Alan Atoll, Ryan Cohen, and Jim Grube, were hired according to GameStop as new directors with significant e-commerce and technology experience. Ryan was the manager of RC Ventures and has a resume of accomplishments. The biggest one includes the sale of the online pet food retailer Chewy Inc. to PetSmart for an evaluation of $3 billion. Because of how much credibility Ryan holds, theories started circulating online that Ryan wanted to push GameStop into the digital gaming market so that it can compete with other online retail companies. Alan and Jim were both successful entrepreneurs in the business and financial realm, with each of them having over 20 plus years in e-commerce experience and serving as chief officers in Chewy Inc. for numerous years. More interestingly, Jim served as director of finance for 2 years at the biggest online retailer, Amazon. It seems very likely that their expertise will be heavily utilized to thrust GameStop back into the competitive gaming marketplace. All in all, these new board members have some serious expertise to back their credibility, and with GameStop hiring such members, they do not seem to be demonstrating any signs of slowing down, even if the company's financials speak the opposite. Now time for the major player of this GameStop story, Citron Research. Citron Research is one of the longest running online stock commentary websites, known for being short-selling activists. Led by founder Andrew Left, they have a track record for identifying fraud and terminal business models. So how does Citron tie in with GameStop? Well, on January 19th, they released this tweet claiming that the prices for GameStop stock will shoot back down to $20. In the meanwhile, calling buyers, quote, suckers at this poker game and boasting about their knowledge in shorting. Clearly, we can see that people were not happy with Andrew Left's explanations. This tone and pessimism towards the stock did not sit well with many, especially those in Reddit's famous WALLSTREETBETS community. This public social media platform's trading community decided to band together to disprove Citron's short sell, perhaps out of spite, or to trigger what is called a short squeeze. A short squeeze is when a heavily shorted stock, for any number of reasons, starts to rise quickly in price, forcing shorts to close out of their short positions and buy back their borrowed shares. This in turn puts more buying pressure on a stock, as former short sellers become current buyers, and often results in the stock price shooting higher. And GameStop is not just a heavily shorted stock, it is the most heavily shorted stock currently on the market, with almost all of their shares shorted. Wall Street Bets is setting up the perfect storm to generate not just some quick profits, but some huge profits. Together, they bought and held shares and options for GameStop, raising the stock price up and up until eventually short sellers' stop limits got triggered. And finally, this is exactly what led to the chain reaction causing the spike up in the stock price. Now, let's see a few examples of the types of gains these Redditors have made. Here is Reddit user Stephen Acho's post on Wall Street Bets. Their portfolio went up 69.69%, setting the price of his portfolio to be in the six-figure range. We also had people show off their call options that they had purchased. Next Reddit user, Felly Brown 2, purchased 22 contracts of GME stock and received a total return of around $43,000, an approximately 1,600% increase. Impressive to say the least. And this Reddit user, Angelus, stated that they have made around $270,000 from just GME call options. Instead of just cashing out, they stated that they are so pumped from these massive gains that they're going to be investing more in GME shares, and that this is the way.
This is the way.
Congratulations to these Reddit users and to everyone who came out with a profit. We hope to see more of your massive gains soon. If you are considering buying or trading GameStop shares for yourself, be sure to use our referral links below. You can get a free stock when you sign up with Robinhood using our referral link. Your free stock could be worth anywhere between $3 to $225. It's basically free money.
Woo! Yeah, baby! That's what I've been waiting for.
So definitely take advantage of the offer with our links below. You still may be wondering though, should you follow this upward trend? Is there still any price action left in GameStop stock, or is it all downhill from here? Well, let's take a look at how previous short squeezes performed. Possibly the most famous short survivor is Tesla stock. Having once been one of the most shorted stocks themselves, Tesla stock started its impressive upwards journey through a series of short sellers covering their positions after continued positive announcements and sentiment foiled the Tesla short thesis. Since then, we have seen Tesla become one of the biggest companies in the world and make Elon Musk the richest man in the world. But will this fortune copy over to a stock like GameStop? We would say that without the change the world drive that Tesla is famous for, a growth like Tesla's may be improbable for GameStop. But a similar continued growth pattern would be considered its best case scenario. Let's now look at another short squeeze. This short squeeze is the famous Volkswagen short squeeze of 2008. No, that's not a glitch in the stock chart. That steep vertical incline is the result of a very sudden short squeeze. In fact, because of this short squeeze, Volkswagen briefly became the most valuable company in the world. This short squeeze spanned over 2 days, where the stock price flew from about 210 euros to about 1,000 euros. However, there is one key thing to notice about this example. The price did not stay at that evaluation. This was not a gradual build-up over time, like Tesla's case. Volkswagen's short squeeze looks more like a seismograph due to most investors selling off their shares and taking quick profits. The valuation of the company did not match the valuation the long-term investors had for the company, and thus the sudden drop-off after the record highs. We are in the situation now where GameStop charts look awfully similar to Volkswagen's 2008 charts during their short squeeze. GameStop does have the potential to become revolutionized under their new leadership, but it is not entirely clear how long investors are willing to wait to see the financials catch up with this new valuation. A sell-off just as quick as this run-up seems very plausible. We've already seen over a 20% sell-off from the intraday high, but so far, Reddit does not seem ready to let up just yet. Take a look at just a few of these Reddit posts we have found. With plans to continue to hold GameStop positions, more and more stop-loss limits will trigger for the short sellers, pushing the stock price higher and triggering even more stop-losses. With this potential cycle, this past short squeeze may just be the beginning. We will soon see what will happen with GameStop stock in the days to come. Congratulations once again to all who made fantastic gains during this epic short squeeze, and best of luck to all GameStop options and shareholders. Stay tuned on our channel for any new details regarding GameStop stock developments. Thank you for watching today's video. Don't forget to subscribe and hit the notification bell to get notified when we release our next video. Please like and share for more videos similar to this one, and comment below with any questions that you may have so that we can address them in future videos. Thanks.